In these videos, a lot of times you'll see me talk about breadth readings, and the reason why we talk about breadth readings is it's very important to see what's going on underneath of the surface. Indexes themselves, some of them can be very heavily weighted to a few stocks, meaning a couple of names can be holding the indexes up while underneath the surface the majority of names are actually not performing well. And this can give us a really good indication of potential turning points in the markets, and it's something we pay very close attention to. Now, what I have up on the screen for us today is I've got the New York Composite Index, so all the stocks that are on the New York Stock Exchange. And you can see here we've had that nice run up here the last couple of sessions. But what I've got on the bottom of the screen here is I have the advanced decline cumulative average, meaning number of stocks going up versus number of stocks going down. And green would be a day where more stocks advanced than declined, and a red would be a day where more stocks declined than advanced. And you can see, here's the beginning of this year. For the majority of the year, we have had that move lower. And as we know, the indexes have gotten beat up. The first time that we had more stocks advance than decline on the New York Stock Exchange happened yesterday since May. And what's really interesting is if I turn this from a daily chart into a weekly chart, we have not had a positive week outside of the week in which we bottomed in the beginning of the year, and we had that 2-week run-up. The week is not over yet, but this looks very positive from a breadth readings perspective, where it looks like we now have more stocks potentially advancing than declining if we hold this way through the rest of the week. And that would be a very good sign of health underneath the surface, which has been something that has been missing for quite some time. Another thing that we like to take a look at is the McClellan summation index, and I'm going to look at this on a daily time frame as well. And what we look for in this is we look for those divergences, and to see this number, we really want it above the 0 line is a nice positive sign. But what I want to point out here is we made the low in the summation index in May here. And what happened was stocks made a lower low, but less names were continuing to head lower on the New York Stock Exchange than previously. So this is what we call a divergence, where we have prices going lower, but the oscillator showing higher. And divergences don't mean that you're going to get a move in the opposite direction. It just means to pay very close attention, because when you do get a move in the opposite direction, a lot of times it ends up being pretty powerful. So you can see right here what we're really watching is we're almost at that 0 line. We get back to this push here we had here in May. We were up somewhere around that 500 zone. It would be a very positive sign for us to take that out. And at the same point in time, the New York Stock Exchange, or the New York Composite Index, has held that 14,000 level and has made that strong move here over the last couple of sessions. So we look like there is some positive signs underneath of the surface. And again, we couple this with just our technical analysis and on price action. Look where all of this is happening. All of this is happening right back at the 2020 key breakout zone. That's the area that's held. We've been saying this now for weeks, and we're going to continue to say it. That's the line in the sand. If bulls can hold that, as bad as this year has been so far, there is some positive hope. We continue to see these positive breadth readings underneath of the surface. We continue to see sentiment being extremely pessimistic, meaning a lot of people are still expecting lower prices, and we know the crowd is wrong at the turning points. This could be set up for a nice Q3 here, potentially, in the indexes. Again, we have a lot to prove because these are still very damaged charts, but the signs are there for some positive encouragement. On the New York Composite Index, we want to take out that high from the middle of June. That's at that 15,000 zone, and that's the level that we're going to be watching here moving forward. If we have any more key changes in those breadth readings, I'll certainly bring them to you guys in videos moving forward. I hope you guys have yourselves a fantastic day, and I'll see you all tomorrow. Take care.